Today, I'm breaking down how trucking companies can get repair funding fast to keep wheels turning, avoid downtime, and protect cash flow. If your truck goes down, your money goes down. One repair can wipe out a week of profit and cost you future loss if you miss a delivery window. In this video, I'm going to show you the real funding options trucking companies use to cover repairs fast without wrecking their cash flow and how to qualify even if you don't have perfect credit. If you want help getting options, comment repairs and check the link in the description. What's up? This is Demetrius Harris, and I help business owners access funding. Today is specifically for owners, operators, and fleet owners dealing with repairs. Engines, transmission, tires, DOT issues, emergency roadside, shop invoices, whatever is keeping you parked. I'm not a lender, and I can't promise approvals, but I can help you understand the best path and what lenders look at. Now, what you'll learn is the true cost of downtime and how to calculate it. Best funding options for repairs, fast versus low cost. What lenders underwrite for trucking repair funding. How to improve approval odds this week. Now, here is a simple repair funding checklist that you can follow. Let's talk numbers. If your truck typically nets you 800 to 1500 more per day depending on lanes, 1 week down isn't just repair costs, it's lost revenue, possible penalties, and relationship damage. Now, I'm going to walk through example. Daily gross, let's say $1,200. 5 days down, that's $6,000 lost gross. Plus repair bill, $4,500. Total impact, $10,500. And that's before late fees, hotel, towing, etc. Repairs aren't just an expense, they're a cash flow emergency. Now, here are some funding options that actually fit truck repairs. Option A, short-term working capital, fast approvals. This is common for repairs because it's speed focused. Many trucking businesses use working capital for urgent shop bills. Now, best for emergency repairs, quick turnaround, the pros, fast, flexible use. Watch out, costs can be higher than bank products. Option B, revenue, bank statement based funding. If your deposits are consistent, this can be strong, especially if credit isn't perfect. Now, what they look for, consistent deposits, strong average daily balance, ADB, limited overdraft, non-sufficient fees. Option C, equipment repair financing, if tied to invoice, parts, or equipment. Sometimes the repair, parts, or equipment can be financed, depending on vendor and structure. Option D, business line of credit. Now, the best long term play. A line of credit is what you want before you break down. But if your profile is strong, it can still be a good solution. Option E, credit card, 0% intro APR, strategic use only. This can work if you have the credit profile and discipline. Not for everyone, but for some. It's a smart bridge. Now let's talk about how to choose the right option based on your situation. Now here's the right option decision map. Simple, it's simple and practical. So here's the decision map I use with trucking clients. How fast do you need funds? 24, 72 hours versus 1 to 2 weeks. Is your credit strong or shaky? Are your bank deposits consistent? Is your current cash position stable? ADB and overdrafts. Is the repair tied to invoice vendor that can be financed? Speed solutions usually cost more. Low cost solution usually takes longer. Now, what lenders really look at. So this is what lenders really look at here. Most people assume it's only credit. Credit matters, but trucking approvals often come down to cash flow and risk signals. Now, the 7 underwriting signals. I'll explain each one of them. Time in business, even 3 to 6 months can help. Monthly revenue, consistent deposits matter. Average daily balance, ADB. Non-sufficient fees, overdraft. Big approval killer. Existing advances, loans. Stacking risk. Industry stability, dispatch contracts, lane consistency. Use of funds clarity. Repair invoice estimates urgency. If you can show the repair estimate or invoice in your revenue history, it strengthens the story. Now, here is repair funding checklist, step by step. Now, here's your quick checklist to get funded faster and cleaner. Repair estimate, invoice from the shop, paper trail. Last 3 to 6 months bank statements, PDF, not screenshots if possible. Know your revenue numbers, monthly average. Reduce non-sufficient fees immediately. Stop auto draft if you're negative. Keep your account clean for 7 to 10 days possible. If possible, have your business docs ready, EIN, entity docs if requested. Plan the payback. Match payments to your load schedule. Now, set a repair reserve after you get back rolling. Even 100 to 300 per week builds protection. Now, here are some real scenarios. 3 quick stories. Scenario 1, owner operator. Emergency transmission needs speed. Working capital, revenue-based solution. Scenario 2, small fleet, consistent deposit, clean bank, can qualify for a line of credit or better terms. Scenario 3, credit challenges, a strong weekly deposits. Bank statement focus solutions become the play. Downtime costs more than most people realize. The goal isn't just to fix the truck, it's to protect your cash flow and keep you running loads consistently. So, if you want to see what you qualify for, comment repairs and use the link in the description to get started. And if this video helped you, make sure you like, subscribe, and hit the notification bell because I drop funding strategies for trucking companies every week. I'll see you in the next video.